Welcome to Module 8 of the QuickBooks Accounting Software training. In Module 8, we're looking at ledger reconciliations because this one helps us to establish the integrity of the data that we've been entering throughout a particular period in our books of accounts. My name is Lilian Katiso. I'm a financial management consultant and QuickBooks trainer. In Module 8, we're going to look at stock reconciliations as part of the ledger reconciliations. Most of the time, we have stock that you're capturing, as we had shown in the previous modules. You have stock that has been entered, but when you do the stock count, you realize it's different from what the system holds, QuickBooks system holds, from what is actually physically counted. Okay, so then we are going to see how then do you go about reconciling the two. When it comes to debtors, we also need to reconcile our debtors so that you don't have ghost debtors, but also you do not have debtors that debt that is not collectible, or those error in capturing the invoice or anything like that. Okay, so we're also going to see how then do we do data reconciliation to make sure that the data balances that we have are the correct balances. The same applies to creditor reconciliation, that whatever we hold as supply obligations for us are actually true supply obligations, and we're not having ghost suppliers. As you've seen in the previous modules, if the data set is captured wrongly, or you've used the wrong interface to capture the data, you might end up having scenarios where you don't have true position of your books of accounts. You find that you have uninflated data ledger balances because, for example, someone used the invoice window to do what? To generate pro forma invoices or to generate quotations because they did not know how to do so otherwise. Or a situation where someone posted a bill and then they have used the check window to pay off the bill, and therefore the bill is not offset. Okay, so as usual, I'm going to share my QuickBooks screen so that I show you how to go through this step by step. So as usual, I'm sharing my home screen again, where we start most of the transactions. You can actually start them from here. So we are going to start with stock reconciliation. And in stock reconciliation, on your right hand side, let me just highlight it for you. Okay. So on your right hand side, this is where the stock activities happen. Okay. So on the drop down here, it has a stock center where you can see everything to do with your stock. It has the build assemblies. If you are assembling something, you have raw materials that are going to be turned into some finished product. So this is where you assemble it, and also adjust quantity on hand. Okay. So now at the stock center, so this shows all this different stock that you have in your system. Okay, so the air conditioning, if you click on the air conditioning, if you click on the sub account of air conditioning, on the right hand side of it shows you all the transactions that have happened before. So there's been a build assembly, there's been an invoice. So if you choose all transactions or you choose this particular financial year, of course, it will just give you transactions for that particular financial year. But you can say you want all transactions, then it will bring for you every transaction pertaining to that particular item of stock. Okay, so this one gives you the breakdown of the different items of stock, shows you every data set that you captured with regard to stock. It is going to show here. But what I want to show you is that you can get a report, because a need for reconciliation means there's something that you're reconciling against. Yeah, there's something that you're checking the accuracy of the data with. If you come to reports, the drop down for reports, there is a tab for stock. And under stock, there is a physical stock worksheet. Okay. The physical stock worksheet, when you click on it, what it does, it brings you a list of all the items that you have in your system, their description, if you had indicated preferred supplier, but also it shows you the quantity that you have on hand. Now, ideally, you'll print this physical stock worksheet, and then you're going to do a physical count. So you check this is 0, what is the quantity on hand? According to the system, this is 37. Do you count and you actually get 37 pieces? So once the stock worksheet or the stock taking exercise is done, you use this one for stock taking. So you can choose whichever period you want to look at. This one is looking at the end of the month, which is 31st December 2022. So once you've done your stock count, then now you come, of course, and do what? So you can export this in a spreadsheet. And then you have a column here for variance, quantity on hand, minus physical stock count, and you see what the variance is. Now the variance then is what needs to be reconciled to what the system has in QuickBooks. And that now takes us to the next point, which is the stock adjustment. So using the same icon on the home page, there is adjust quantity and value at hand. So if you find that a particular quantity in stock is different from what was there before, this is where you adjust it. But you can find sometimes the quantity is correct, but the value is different. Something will have happened that the value has changed. If you're using QuickBooks, QuickBooks Premier, QuickBooks Pro, QuickBooks Accountant, what they do average costing, which means if I bought something at $10 and then another time I buy it at $12, it will give me an average cost of $11. Okay, it does average costing. So which means you might find that at the end of a particular financial year, you want to make sure that you have the accurate stock balance. So you can choose to adjust quantity, adjust value, or you can actually adjust both, whatever your case might be. Then it's important to choose which account are you making the adjustment to. Okay, you can be adjusting to a cost of goods sold account. Some versions of QuickBooks have stock shrinkage account. Yeah, so for you to have your trading account reconciled properly, put the stock shrinkage account under cost of goods sold and not under expenses. Because when you're going to do the stock reconciliation, having your opening stock and then adding the new purchases and then deducting the closing stock to know the cost of goods sold, you might end up finding that there's a difference. So you can create also, the adjustment could be because there was spoilage. So some people want to find out what is causing why am I adjusting this one? There could have been a spoilage. There could have been something happened to that particular stock. It went bad. Okay, so you have a reason for adjusting. Sometimes people also adjust stock because they gave out some stock for marketing and promotion, you know. So if you give some of your items of stock for marketing or for promotion as promotional items, then also you need to adjust that accordingly. So you choose which account you're going to adjust. And here it actually tells you that the account specified for adjustment is neither an income account or an expense account. Most people offset the change in stock to an income account if it is a gain, or an expense account if it is a loss. Okay, so you have to choose which one applies to your business. Then you find or select that particular item that you want to adjust. Okay, you have to decide which item you want to adjust. So let's assume that the item I want to adjust is this one, body 174Y. Okay, I choose that. I can choose multiple items, of course. In this case, I'm just choosing one item. So you can choose to select all items, or you can choose to have only that one item. Okay, going to clear all. Sorry, select that. Then I add selected item. If there are multiple items, I add selected items. So this particular item, it shows me the quantity on hand is 5. The average cost is 160.71. The value is there for that, which is this times this. Now, if I find that the quantity on hand is actually not 5, but I found that there were 4, okay, I'll put here that the new quantity is 4. If the new quantity is 4, then it means the quantity difference is 1, okay? The quantity difference is 1. And if the quantity difference is 1, then the new value, of course, is still the same. The rate, that particular rate, times 4 to give me this particular value. But if I feel that no, the average cost per the item has gone up, so the value that it's giving me is supposed to be higher than that, then I can also change the value so that it multiplies the quantity times the unit cost or unit value to give you the total value. So this is where you will also change the new value that you want it to have. But if you're only just changing the quantity, you'll see that that particular that has reduced, it just has one amount adjusted. And you choose which account that you want that adjustment to go to. But also, if let's say the adjustment was going to a particular customer, then you choose which customer it was given to. Assume it was a promotional item, for example. It was given to a particular person and it was a particular class. Actually, let's assume that we are giving as a promotional item, and I'm going to put it under advertising and promotion as an expense. And the customer, I'm going to give it to Lillian. And then the class is under parts. Okay, fine. So then you can save and close. So that's how you adjust. So now my quantity on hand is going to reduce by 1 to give me a new quantity of 4. Okay. Then my stock is going to reduce by that value. So save and close. So if we go to our reports, the profit and loss report. Okay, you see here advertising and promotion of that one item. Okay, so I have an expense there of 190.71 of that particular item. If you double click on it, it will show you I had a stock adjustment to Lillian of 160. Okay. Then even in the stock report, if we went to the stock report, it was 160. Let me just get the name of the item again. Okay. If you keep on double clicking the Zoom, it takes you to the actual journal. So it was 174Y. 74Y. Now, if you go to the stock center, you're going to see the movement there as well. Okay. So if you go under suppliers, under stock activities, you can also get a stock center there, apart from the home page. If I go to the stock center and I put that number, it is this one, 174Y. Okay, here you see it shows that there was 1 unit adjusted on that particular date, stock adjustment, and that is the value of what it has been adjusted. So whatever stock adjustments you need to do, you can do like that, okay? That is how you go about doing stock adjustment. But the other stock reports that you might wish to have a look at, to review, if we go through the chart of accounts, where there's stock, okay, stock is here. If you double click on the stock report, you will see here, yes, there was an adjustment on this particular date, advertising and promotion item given this one to Lillian, and that is the amount. And you see our stock value has reduced from $59,503 to 59,342. Okay. So that is one of the reports that you can, and one of the places you can look at. But also under stock, you can scroll to stock, then you have this stock valuation summary. If you go to the stock valuation summary, it gives you a report that shows you quantity on hand, okay? Of course, unit of measure. Then shows you the average cost, the asset value, the total asset, the selling price, retail value, and the total retail price. Now, when you look at this and you realize that maybe the average cost, this is not the average cost of that particular item, then you can adjust it. Because remember, I mean, this is not the actual cost that you want as a 31st of December, then you may have to do a value adjustment. You look at the quantities that you have and you see if they are fine, okay? So this is another useful report, the stock valuation summary. It's another useful report that helps you with your stock reconciliation. Do they have the right quantities? Do they have the right average cost, which of course gives you the asset value of your stock. So that is the measure of your stock. Remember, the asset value is the value at which you can sell that particular stock. No, if you're to dispose of that particular stock, okay, that is the asset value of that particular stock, not necessarily the selling price of the stock. Okay, so that is how you do stock reconciliation. Now, when it comes to debtors reconciliation, okay, even so, the way you saw, you have a stock center where you can go and you see. So the stock center, there are two ways to go to it. From the home page, there is stock center. But there is also under suppliers and stock activities, there's also stock center. So when you go there, you can actually view each stock item by item and reconcile any stock that has a discrepancy. You can see if let's say, were all the bills entered, okay? Were all the purchase orders, I mean, if there were sales, were all the sales entered? Were all the payments received? Were all, everything that was pertaining to that, you can actually go and see if where the error is coming from. Okay? So that is the center for stock information. Now, when it comes to debtor reconciliation, which is accounts receivable, QuickBooks called it accounts receivable. Remember, we said when you issue an invoice, okay, you're supposed to be able to receive payments against that invoice. So if you receive payment against that invoice, it offsets the invoice and therefore reduces the debtor's balance. But there's some situations that I've seen someone creates an invoice, but then they go and do what? And create a sales receipt. So you end up having the invoice never being cleared because of what? Because it wasn't receipted. They didn't use the right window to record the payment. So where do you then start with the debtor reconciliation? So you go to reports. Under reports, there is customers and receivables, and then there is aging summary. Now, the aging summary gives you the report of the people who owe you money, and it is aged in intervals of 30. Of course, you want it to be aged in different intervals, you can choose. So this is as of 31st of December, aged intervals of 30, and it's going for the past 30 days. If you want, 90 days rather. If you wanted to go beyond 90 days to 365 days, you can do that as well. Okay, so you see I've added 365 days. Now I have more days to check. Okay, but to fit in one screen, let me just limit myself to 90 days for now, so that you can see this column. So this one shows you the current outstanding balances, those that are between 1 day to 30 days due, 31 to 60 days due, 61 to 90 days due, and more than 90 days due, okay? And you can filter this report in different ways. By default, it is going to be, it looks at this column and it goes alphabetic. But we can collapse this so that people who have multiple jobs are collapsed into that, into the main customer job. So I've collapsed it. When you expand, it gives you the details. So for example, so Daniel's cars has this other jobs within it. Okay. Tracy's team has sub jobs. Okay, so you see Tracy's team has sub jobs. So you can go and see each of the different. So what Tracy owes as a team, the total team owes, this is the last column, owes 10,741. But you can see part of it is William, part of it is Virginia, part of it, blah, blah, blah. So that gives you the detail. But assume I just want to collapse it so that I have a snapshot of that. Now, when you collapse it like this, it is alphabetically arranged. Okay, that's what it does. It's alphabetically arranged. But you can, so alphabetically, if you recognize your customers alphabetically, you can see, okay, does this owe this much money? So, but also you can choose to do what? To, instead of sorting by default, you sort by total. And when you choose sort by total, you can choose to sort by the smallest, okay, going to the biggest, or you can do vice versa. You start with the biggest, going to the smallest. Now here you're going to look, okay, so this person owes us a total of $114,000. Now you need to establish if this is all true. Have all the invoices been posted and captured accurately? Have all the payments been posted against those invoices? Okay. And also, of course, if you have a debt collector or someone who's in charge of receivables, they know they have to put their efforts with their highest value ticket clients as they go. I mean, they shouldn't make a lot of effort collecting $21 when you have $114,000 to collect. But also, you can see you have more than 90 days of a lot of money is held that are more than 90 days due. So you have to confirm that are these ones actually valid. If you want to see how far these ones are outstanding, then that's, you can extend, as I said before, you can go to 365. Now, if you find that there are some things that are owing, so imagine someone is owing $47,000 for more than a year. Is that still recoverable? Okay, is that still recoverable? So you confirm that these balances are true balances, or if they're not true balances, you go and you check each of the individual ledgers and reconcile them. You can do that by double-clicking here on the 114,000, for example. When you double-click there, it shows you, yes, so there was this invoice, another invoice, another invoice, another invoice, another one, and another one. That gives you that amount. So you have to check, okay, were these invoices correctly posted, or was there a duplication, or what could have happened, So you check if that is correct, that is fine, okay? So when you double click, it shows you the individual transactions, and you confirm that those transactions are true. If they're true, then of course you close that and you move on to the next person, okay? So you say Kathy's Classics actually truly owes us that amount of money, okay? I went to a particular client, and when I was looking at their debtors ledger, they had a lot of money that was outstanding. But what I discovered is that they were not collectible. Why? For one of the customers, they were using the invoice window to issue pro forma invoices, which was not right. So it gave rise to debtors that they could not collect. For another one, it was a school, and when children move to another school and without paying their previous debt, it will just remain there outstanding. So as an accountant, depending of course on your policies, how do you make provision for bad debt? Okay, that is part of doing the reconciliation for your ledgers. But another place where you can look at your customer ledgers, you come to under customers up here on the upper tool, there's customers tab, and you click on customer center. When you click on customer center, this is another place that you can give the details of your customer, what they owe you, okay, what they owe you. So for example, I want to look for the one that owed us a lot of money, was Kathy's Classic, yeah? So you can either search the name, is it Kathy's, yeah? You can search the name, or you can scroll down to where the name is. Goes to Kathy's Classic, okay? Whichever works for you. Now, when you go to Kathy's Classic, it shows you all the transactions for Kathy. So there were some invoices, then there were some payments that came through. Okay, so at least she has been paying. You see now from the other window of the receivable, it was just narrowing down to the outstanding invoices, which might give like this lady never pays. But if you come to her ledger, she actually pays. Okay, she actually pays. So this ledger, you can sort it from the oldest to the newest transactions. So if you look, she had some old transactions before, and then she had some payments that she made. Okay, so she made some payments, more invoices again, and more payments she made. So you can actually confirm that is this a true balance of what she owes? Yeah, if all the invoices were captured, I mean, all the payments, the invoices were captured, that is how you check to make sure that your data balance is actually true representation of the debtors that you actually have as per your book value. Okay, so that is how you reconcile the debtors. When it comes to, and you can always print this list to give whoever is in charge of debt collection. That is how you reconcile the debtor side of things. Now, when it comes to accounts payable, it's the similar process. You go to reports, you go under suppliers and payables, then there's an aging summary as well. Now, this one shows you these are the suppliers that you still need to pay, okay? And this is how long it's been outstanding. So by default, it is alphabetically arranged, but if you want to change to see the one that you owe the most first, or with the least first, if you want to pay the least one first, and encourages you to pay the balance. But here, yes, it shows us this is what is outstanding. And this actually helps, especially if a supplier calls you to demanding for a payment. I actually do that most of the time. Because a supplier can say, oh yeah, you have this outstanding. I'll come and check here the aging report, and I confirm what what the supplier is demanding and what we have. In case there's a discrepancy, you can double click and you see, oh, what makes up this? Oh, so there are two bills that are outstanding. But that means that these are the only transactions you did with this particular supplier for that particular period. It just says these ones are the uncleared transactions. Because if you go to Sanjeev's ledger, there are many other transactions that happened there, which means if you want to do transaction by transaction reconciliation, you go where? To the ledger. How do you go to the ledger? I mean, the customer center, supplier center, you go to suppliers, supplier center. And the supplier center, you click on suppliers, and then you look for was it Ranjiv? Yeah. Okay, so you look for Ranjiv, and then it takes you to Ranjiv. Or did I spell the name correctly? Was it Ranjiv? And remember the name. So Sanjeev, Sanjeev Electronics, yeah. Sanjeev, not Ranjiv. I have a friend called Ranjiv. Sanjeev. Okay, we click find, then you get Sanjeev Electronics. So you see there's lots of purchase orders that went to them. Then there's a bill that actually was posted. Yeah, there are bills that were posted, and if there are any payments, it will reflect here on the transactions that you've done with Ranjiv. But also, this is for this financial year, which means you can choose to only look for a particular period. If you just want this month, yeah, it narrows down to the transactions for just that particular month. So the beauty with QuickBooks querying, you can actually use a period to query your data, and it narrows down to the period you want to reconcile. Okay, so it makes reconciliation easy because you can narrow down to the period that you want to look at. Apart from looking at the suppliers, when you're doing reconciliation, you can also do what? looking at the transactions. If you have particular checks you're looking out for, particular purchase orders that you're looking out for, items of receipt, bills and bill payments, all these different things, you can be able to look out for them under the Supplier Center. Okay. So that is how you do a reconciliation for the suppliers, for the debtors, and for stock as well. What is very, very important is to make sure that every time when you receive stock, you have a bill that is posted against it and you pay the bill. Okay? If you want to have accurate supply information or accounts receivable information, accounts payable information, you make sure that if you enter a bill, you use this pay bills window. You don't write a check, as we discussed that in the previous module. The same way with the debtors, if you create an invoice, you make sure that you receive payments against invoice, not using the create sales receipt. Once you follow the right procedure, most of the time you'll find that what? Your debtors, your accounts receivables, and your accounts payables or your supplier ledgers will actually be in balance. But in those odd moments when it doesn't balance, at least now you know where to find the problem, where to locate the discrepancy and find how to resolve it. Because some of them might just, especially for the receivables, might just mean sending statement to the customer for them to see what they owe you, and it triggers their memory, and they had forgotten what they owe you, for them to start paying you. Okay, so that is it for module 8 on ledger reconciliations, the main ledgers that you need to reconcile so that you know that your balance sheet balances are actually accurate and true value represented in your books of account. Okay, thank you for watching and see you in module 9.